So the S&P 500 with over a 10% pullback, NASDAQ with over a 15% pullback. The fear and greed index is at extreme fear and the Japanese stock market looks like it's collapsing. The VIX reached its third highest level ever since the existence of the VIX in 1993. And people on X are claiming that the world is going to end. Is that really the case? Let's find out in this video. I'm going to keep it as short and concise as possible. Stick with me, let's go. The Nikkei 225, if that's how you pronounce it, had a massive drop. This is on the 4-hour chart, but on the daily as well. It was a huge drop, down at one point over 26%. This was on August 5th. It was the largest loss since the 1987 Black Monday crash, and the next day we had the largest gain since October of 2008. So it just shows you when these crazy recessionary, crazy end of the world fears come into play. Typically, after these events, they are liquidity events, and after these events, we have massive rallies, and people can make a lot of money trading the opposite direction. But very briefly, in a nutshell, what happened in Japan? Basically, investors were borrowing the Japanese yen at very low interest rates, and they were investing that money into an asset that's paying a higher interest rate in another country. But basically, they were taking large sums of money, borrowing at a low interest rate, and then investing it in something paying them a higher interest rate. When the Bank of Japan unexpectedly raised rates, that made borrowing the yen more expensive, and investors had to probably pull out their money from their international investments to pay back the debts they had on the yen, and it just caused a worldwide sell-off in markets, including the Nikkei 225, which saw, I think, a 13% drop in a single day, which is pretty insane. Like I said, the largest drop since the 1987 Black Monday crash, and then we had that huge rally afterwards. And looking at the fear and greed index, we are at a 24, which is extreme fear. This is for the US stock market. So even now, after we've had this initial big recovery, after that initial sell-off, you can see that investors are still in extreme fear points. Now, one suggestion I can give you, if you're going to buy US stocks for the long term, the best times to buy are when you see an indicator like this at extreme fear. As Warren Buffett says, buy, keep it simple, buy when there's extreme fear and sell when there's extreme greed. So an initial time to start dollar cost averaging for the long term for indexes like QQQ or the S&P 500 would be great in these types of times. Also, if you look at the crypto markets, we are now at fear levels for Bitcoin and crypto as a whole. So also, in my opinion, a good time to start averaging into your positions. In the Discord, we have been talking about buying Bitcoin regularly underneath this sell side liquidity at 56,000. So we bought during this initial dip, and I also added to my position on this dip. On July 5th, I mentioned that Bitcoin took out major sell side liquidity on the daily and the weekly, and I started DCAing here. And as you can see, that was at this point when Bitcoin was at 54,496 chart. That was right here when Bitcoin was at 54,000, and we had a huge push back up to 70. Now, I didn't sell any of my position. As you know, I'm a long-term investor in Bitcoin, but we also added underneath here. This was called out on Twitter on August 7th. I talked about this 4-hour inverse fair value gap. If we were to inverse above it, that would be when I would be full-blown bullish on Bitcoin again, and I would be adding to my position. And now that Bitcoin has inversed this 4-hour, I think at minimum we're going to go up to this internal high at around 66,000, and then hopefully make new all-time highs. But let's see what happens. But again, in my opinion, still a great time to add for the long term, especially when we are at extreme fear for indexes and for crypto. And of course, we have to be realistic and we have to be hedging portfolios if possible. One of the things that we have been adding in the Discord as well is TLT. That was an ad that I had at 89, 90, and 91. We've seen a huge push. This tracks 20-year treasury bonds through an ETF. It also pays you a nice dividend. But basically, if the Fed cuts interest rates in September, which seems very likely at this point, the chances of a rate hike of either 25 basis points or 50 basis points on September 18th is 100%. So there's a very high likelihood of the Fed cutting rates. If they do, we know that the yields will start to tank as investors put their money into bonds, and the short-term and long-term bonds are both going to drop. If the yields tank, bond prices go up. That is what TLT tracks, is bond prices. So as a hedge for our long-term portfolios with a much smaller position, we have TLT in our accounts. If the Fed cuts rates and the stock market does decline, which is another reason why there's extreme fear in the markets right now, TLT should rocket past all of this trendline liquidity, or LRLR as we talk about in ICT terms. My first take profits will be at this 100.57 level, and then my second take profits will be at 109.68, and then runners will be held if the bond market decides to rally further than that, which is definitely possible. But again, this is just a hedge for our long-term portfolios in case the markets take a dive. In other news, if you are looking to refinance a home, we are finally seeing a decline in mortgage rates, so that's a good sign as well. But that is another story. We can cover that in another video. And then lastly, guys, as far as day trading is concerned, let's go over the economic calendar for the week. As you know, as a day trader, I trade futures. If you want to learn how to day trade futures and you want live call outs and explanations of why I'm taking trades, you're more than likely to join the Discord. The description will be in the comments below. We are running a 3-day free trial right now. But as you know, I only trade on days with red folder news, so Monday is a no-go. There is no red folder news, only yellow, which is low impact. Tuesday the 13th, we have one of my favorite setups in the market, where there is only a singular set of red folder news at 8:30 in the morning, which should create a data wick candle that has a data high or a data low, and we will take an inverse fair value gap setup to that wick high or to that wick low, and I can show you examples. Wednesday, we have CPI, which is going to be super important, guys. If you don't understand what the Fed looks at when it determines whether it's going to cut rates, CPI or inflation is one of the most important indicators they look at, along with unemployment. But if inflation comes in higher than expected, the chances of the Fed cutting rates in September will diminish drastically. It's still possible that they cut, but if inflation is still coming in higher month over month and year over year than expected, then there is not much of an incentive to cut rates. This is also going to be a great day to trade a singular set of red folder news at 8:30. So again, we're going to get one of those data wick candle setups that I talk about. Thursday, another perfect one set of red folder news at 8:30. This is going to be a great time as well. We're going to see unemployment claims, retail sales, core sales. So this is going to be a good day to trade. And then Friday, if you are still trading on Friday after basically having 3 perfect days of trading, I don't know what to tell you. There's no news on this day, and the likelihood that we're going to get a good setup is minimal, so I would take that into account before you decide to click a button on Friday. And that is it, guys. Short, sweet, concise. I covered crypto, I covered interest rates, I covered the Fed, I covered bonds, I covered the markets as a whole and what I'm doing to hedge my portfolios. Now, as far as stocks that I'm adding personally, I did add Shopify before the massive rip, and I'm not going to reveal everything that I've been investing in, but if you want to join the community, a free 3-day trial in the description below. I hope to see you guys there, and best of luck with your trading.